$684 billion in losses. Hi and welcome back to the channel. Welcome back to another walk and talk in a very rainy and soggy United Kingdom today. We are going to be discussing a little bit of what's going on in the macroeconomic world. What we were talking about the other day in terms of the Fed and the Fed's impact on the cryptocurrency market, we're going to be discussing today how the banking sector is on the verge of another crisis. We have a lot of interesting things to talk about, so as I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Right, just another walk and talk video, just getting out with the camera away from the desk and getting some exercise and getting rained upon. But we're not here to discuss the weather. We're not here to discuss the countryside. We are here to discuss the $684 billion in unrealized losses in the banking sector. So the US banks have, of course, got exposure to way too many assets, specifically in the form of securities, and they have a $684 billion unrealized losses on their books. What are unrealized losses? Well, I'm glad you asked. Unrealized losses are, of course, the difference between what the bank paid for a security and what the security is worth today. And that means that the banks have $684 billion of unrealized losses on securities that they're currently holding. Now, here's the question. Do we think that poses a significant risk to the banking sector over in the US? Well, it wasn't that long ago that we were talking about how the US had added billions of dollars to their debt in just a short 15-day span, essentially meaning that the US is borrowing more money than it can pay back, and of course we have these unrealized losses on the banking sector as well. Is this a good sign, or is this something that potentially could cause the markets to get spooked and potentially cause another move to the downside? Well, I think we are going to see some interesting developments in early 2024, specifically with the Fed, and if the Fed do in fact start to reduce their interest rates, that will essentially mean that those unrealized losses may start to actually make some money, and they might actually start to decrease their exposure to those unrealized losses. Ultimately, the banking sector is at the hands of the Fed in the same way that the stock market is, or even the crypto market. If the Fed do a pivot in the 2024, and essentially reducing their rates in early 2024 rather than increasing them, then we are going to see the US banking sector start to actually see some actual profit or some lesser losses, if that's such a thing, on their books. And of course, we're going to see the stock market start to reduce down. We're going to start to see cryptocurrency start to pull back. And all these are the signs of a fantastic bull market that are around the corner. Essentially, what we're expecting to happen here is we're expecting the Fed to reduce their interest rates. In doing so, they're only going to occur, or these interest rate cuts are only going to occur when the market is its most vulnerable, i.e. we'll see a mass sell-off effect across the stock market and the crypto market. This isn't anything to be too concerned with, because I do think it's going to happen rather quickly. We'll move down and then rapidly move on out. And this could be exactly what the banks are waiting for. With such a significant amount of loss on their books, they are going to be looking for any reason to kind of see some hopium in the markets. Ultimately, we've seen some green across the broad spectrum at the moment. I think the banks in Q3 did see a 22% increase on their securities, but still, they are at $684 billion in unrealized losses. Now, ultimately, if the Fed have a pivot, with that move to the downside, that's the opportunity for most retail investors to dollar cost average build out their positions. We'll come on out of there and we'll start to see the next bullish market. Interest rates going down, we'll see the Fed basically printing, starting to fund things, and as such, we'll start to see a lot more money flowing back into the market. We'll have the Bitcoin halving event that will also fuel some speculation. Won't actually have a direct impact on the supply-demand metrics that drive price, but it's going to basically get a lot of eyeballs on the market. We'll also have the Bitcoin spot ETF and Ethereum spot ETFs being approved. The approvals here are going to be, in my opinion, a bit of a sell the news event before the actual product launches. I would expect to see the Bitcoin spot ETF about 3 to 6 months after approval actually land on the market, where we'll start to steadily see inflows of cash or liquidity into those ETFs. Now, it's not going to be quick, it's not going to be instantaneous, but I do expect hundreds of billions of dollars to flow into those products, which will lift the crypto market up to significant highs. But I do think everything that's going on with these applications with the SEC, they are ultimately just going to be a buy the rumor, sell the news event, because the products themselves won't launch until much later on. Specifically, in my opinion, around June of 2024. Hopefully a little bit earlier, but ultimately that's where my opinion sits with that one. So with banks losing so much money or have so much loss on their books, are we going to see a mass sell-off effect towards the end of the year to balance their books? Are we going to see them just hold those losses? And are we going to see the Fed pivot and basically start to see the banking sector recover? Or do we think the Fed are going to continue to raise rates, which will continuously put more pressure on the banking sector and see more banks fail? There's a lot of possibilities here, guys. Personally, I think we'll see a Fed pivot in Q1 next year. And as such, I think the banking sector will start to recover as the Fed start to print more money. We will see a lot of retail, unfortunately, succumb to selling pressure during that pivot moment, but it is going to be short-lived, and I do think we're going to see a fantastic run back out of there. That is going to wrap up today's video. I'm going to try to get out of the rain. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.